This is our Forex blog for January 27th, 2014, and I've basically been spending all my time working on automated trading systems, which we are releasing in our software as Forex signals. There's literally hundreds of things, 100 plus things that most new traders don't know that they need to know. Support resistance, Fibonacci pullbacks, Fibonacci profit targets, Fibonacci time extensions, support resistance areas. There's 28 different support resistance areas in here. A slew of different filters that if above a certain price, the price tends to go up, below a certain price tends to go down. Depending on the momentum of the move, it's more likely to continue up. I have basically spent the last few days working extensively only on trailing stops. Notice how this trailing stop widens right here and widens right here. Normally we have a tight stop. If the market is super strong, we widen the stop so that we don't get stopped out. And in this instance, we make another 10, 20, 25, 30 pips. And more importantly, when the market's long and super strong, we don't have any sell signals. This might have been a sell signal right here where we've avoided a loss. We might have had a sell signal here, which would have possibly been another loss. By fixing the trailing stop code, which also, by the way, happened right here, we avoid a lot of losing counter trend trades, and we also make more money on the super explosive trend trades. So our Forex trading systems are extremely advanced, and in fact some patterns are very likely to lead to 15 to 50 pip counter trend moves, or at least 30 minutes to an hour and a half counter trend move. And when those patterns happen, I actually put code in there that prevents any more buys for a certain time period, a certain number of bar period, or a certain pip movement counter trend. So this is not one of those patterns, but if it was, I can put into my code that I don't want any more buys for at least 30 minutes or 25 pips. So it would possibly avoid some counter trend or some trend trades that would likely to be losing trades. So our trading systems are very sophisticated. But for those of you who want to just manually trade, the best way to do that is using our currency indexes. This is the dollar. We take all the dollar pairs and actually create a chart of just the dollar, just the euro, just like the Dow Jones, NASDAQ kind of takes 30 stocks or 500 stocks and makes a chart based on all of those. We do that with each of these currencies. And it's quite easy to trade with it. If one currency, for instance, the euro, goes up, hits the upper band, comes back down, if it breaks down underneath its lows, that's a trend that's likely to continue down. You want to trade that versus whatever currency is strongest. Now the pound is clearly the strongest of all of them today. That's why it's not a surprise that most of these buy trades were so big. Big. Loss here, huge win. This one, you got in at 13 and got out at 60. I mean, so it's almost a 50 pip move right here. And even this last one right here into 49 and out somewhere around 70, 76, 25 pip move. Our risk is 6 to 10 pips usually. So if you're making 30 to 50 pips, you're making many multiples of what your risk is. So the euro is going down right here. Let's try to find a currency that's strong, that's not up too much. The CAD is coming up to its hourly moving average previous day's high. If it breaks out above that bar's high, we could take that trade. Alright, so right here at 655 is a potential trade with the weak euro and the strong CAD. A little bit before 7. Let's take a look at this. Weak euro, strong CAD, and you can see, right a little bit before 7, it falls from 51.08 down to 68. So it's about a 40 pip move. You want to trade the ones that are strong versus the weak, but you also don't want to trade currencies that are outside of their bands. These are areas where the market usually kind of gets some kind of a bounce most of the time. Every once in a while, probably 1/3 of the time, the price will continue. But you want to find a strong currency versus a weak one, but that's not too far outside the bands. Now this one's outside the bands, but it did go way outside the bands up here. So you could, consider a euro pound sell around 6:30 to 7 as well. You can see 630, and this one does go down. But keep in mind, when you have one currency that's so strong and so much outside of its bands, it means basically the pound is moving so far beyond what it normally does, it's very likely to reverse. And we have a ton of tools that do that. Not only do the containment bands do that, we have a tool called the range projection, which will show you at any time frame you want. Let's look at hourly basis, and you can put 2 standard deviations on here, which means there's basically a 95% chance price will be contained in that area. These are the dotted lines, and you can see it hit that area right here at 550. There's 95% chance it's not going to go up anymore, it's going to go down. Of course it does. It's way outside our containment bands. It's at the 95% likely reversal area. You know, whether you're a trend trader or a counter trend trader, you really got to take a stab at a trade like this versus a currency that's also maybe strong and not up so much, or is super weak and likely to reverse the other way. Here it looks like the dollar's about to go up. The pound's going to reverse right here at 555. If you look at the pound dollar, more than likely right around 6 o'clock it's going to go down for a little bit. Here's 6 o'clock, kind of went down, up, down. It wasn't the biggest move in the world. You know, you can see the dollar really never went up, which is the reason why the pound dollar never fell. This one, right around 6 o'clock, is trending up. You know, there's some days there's just no perfect trades. This one has a daily trend that's up and a weekly, monthly trend that's down. Clearly it found support at the point of control and it's going up here. You know, the pound's very likely to reverse. The pound Australian is probably, you know, the best one to be selling around 6. And you can see it fell from 87.80 area all the way down to the 10 area. So it fell 70 pips. Kind of fast, and then kind of worked its way down. Most days there's some really high probability trades. Maybe the yen's strong on all time frames, and there's 2 or 3 currencies that are weak, and you can sell the weak currencies versus a strong yen, and all of them are going to go your way pretty much the entire day. Other days you have currencies that, you know, one of them is super strong when the other one is weak, but the super strong one is up too much to be really safely buying it. And, you know, on days like that, you might want to just trade our signals because they're very accurate. We've spent close to a year working on these. There's over 150 patterns in here, and it's getting very close to 15,000 lines of computer code that come up with these signals. So most people are not going to learn everything that's in these signals, and honestly, most people couldn't watch 25 or 30 indicators with different time frames, different settings to determine, you know, what these entries and exits would be, you know, especially on multiple currencies, let alone, you know, most people couldn't even do that with one currency, let alone 10 currencies, but the computer can. And that's why we are focused ourselves on automated trading, and we release those same exact entries and exits to our traders that you can manually take with MetaTrader or any other broker's platform.